Oil prices have stabilized over the last week or so as OPEC member countries have met to discuss production for the next 12 months. Now, it seems it's not going to be as straightforward as some may have hoped. We can remember, obviously, over the last month, the oil prices have rallied very strongly, and there's been two main causes of that. The most obvious is the three vaccine announcements: Pfizer, Moderna, and AstraZeneca, all announcing positive results, which have really boosted these markets, boosted people's economic outlooks for the next year, which obviously directly impacts oil demand. So that's been the main driver of oil prices moving higher. But what initially brought them off their lows when they were headed back into the mid-$30 territory was the suggestions from a couple of oil ministers, most notably from Saudi Arabia and Russia, the suggestion that they could be a little bit flexible with regards to tapering the production cuts. In January, they're currently expected to increase production by 2 million barrels a day, taking cuts from 7.7 million barrels a day back down to 5.7 million barrels a day. Now, this was initially planned on the back of an expectation that the economy will continue to rebound into the end of the year. But lockdowns across Europe and now restrictions in the US have forced a rethink that's changed the economic outlook, which is why the ministers at the time were calling for potentially for flexibility and why the markets were starting to price in a change. But what has changed in the last few weeks is price has responded very positively. Now we've got prices now that are trading at the highest levels since March. We can see on this chart, for example, we've gone through the 43.50 highs back into early March territory. What this has done is it's created a buffer for producing countries. So now getting all the oil ministers on board with a delay to that 2 million barrel cuts, even if it is needed to destabilize, to create more stability in the markets, even if it is needed to rebalance the markets, and also arguably to eat away at the inventories that have built up over the last 12 months. The fact that we've got the prices at these levels is going to be encouraging to some oil ministers to ramp up production once again. So this is where the dispute is likely to lie. And what's actually happened this week now is there was a preliminary meeting over the weekend between a select few oil ministers that did not go to plan. An agreement wasn't reached with regards to a broad outline for production next year. The Monday meeting wasn't much better. The Tuesday meeting with OPEC and its allies, including Russia, was actually pushed back to Thursday while they try to find an agreement. So that's taken some of the wind out the sails of the oil rally. We've come back from around the $46 highs in WTI back a little bit lower, but still just above the peaks that we were seeing over the course of the spring and summertime. So still above that 43.50 zone. Even if we do pull back into that region, I don't think that's a major concern. I think if we hang above $40, then I think that's going to be seen as encouraging. What we've effectively got in oil is a buffer. If oil ministers do disappoint and we either see a much smaller increase, or we see it push back, or we don't see any pushback whatsoever, and we see that, if we do see a pushback and we see that pushback to March, April time under pressure from certain oil nations, then we could see oil prices fall. But the question is, how far are they going to fall and how big a gamble are they willing to take? A move back below $40 immediately puts them back under a certain amount of pressure. So I think that's the key areas here. $40, $41 technically on the chart, 43.50 obviously being the test. To the upside, though, if we do see a deal agreed and the oil ministers do deliver, then we could see more potential upside. And again, the levels above here, $46 being the most recent peak is the standout here. 48.50 above here has been a previous area of technical resistance, so one to keep an eye out for. But obviously the big one is $50. If oil comes to pass $50 on the back of any agreement here, then things are starting very much to look up, and the darkest days are clearly behind it. And the fact that we've got all this positive vaccine news, the fact that the UK regulator has today approved the Pfizer vaccine for rollout, all of this is moving very much in the right direction, which is going to be bullish for oil prices. The only thing I'd point out is those momentum indicators at the bottom. We are starting to see divergences forming potentially because of this oil meeting of various ministers. So that is certainly one to keep an eye out for. But the outlook for oil right now is certainly more bullish than it's been for a very long time.